Welcome back to the deep dive. We are jumping straight in today. We're tackling that really persistent question. Why hasn't the crypto market fully recovered? Why does Bitcoin seem to hit a wall whenever it tries to push higher? For months now, the chatter, especially online, has been about manipulation, maybe paper Bitcoin trades, holding things back. But our mission today, we're going to look at the hard data, the on-chain stuff. That suggests it's maybe simpler than that. Maybe it's just, well, good old-fashioned sellers.
That's right. And it's a crucial distinction, It changes how you see the whole market picture right now. This selling pressure isn't some outside force. It's coming from within. We're talking about the OGs, the original gangsters.
The early adopters, the long-term holders.
Exactly. People who bought Bitcoin years ago.
Yeah.
And the analysis, our sources confirm they're taking profits, like record levels of profit taking. And that creates a very real organic resistance that all this new institutional demand has to absorb.
Okay, let's break that down. Analyst James Check argues this exact point, right?
Yeah.
That the sheer volume of selling from these existing holders is the real resistance. And he emphasizes that the market still hasn't quite grasped the scale of it.
Oh, the scale is immense. When you dig into the on-chain data, realized gains that's confirmed profits taken from wallets have been hitting something like $1.7 billion per day.
Wow, okay, wait. $1.7 billion daily? That sounds enormous.
It's up there with the kind of profit-taking we saw near the absolute peak of the last bull run.
But hang on, how do analysts know it's the OGs selling and not just, recent buyers or traders churning things? Seems tricky to pin down.
It's actually one of the neat things about the blockchain, the public ledger. Analysts track a metric called the average age of spent coins. Basically, if a coin hasn't moved for, say, 6 months, it's considered held. If it hasn't moved in years, 5 years plus, that's definitely an OG coin. So when that average age starts creeping up significantly, like it has been throughout this cycle, that's your evidence. It tells you the coins hitting the market now are predominantly these older, dormant coins coming back into circulation. It's not short-term stuff, it's the veterans.
Got it. So the age metric confirms it's the long-term players taking chips off the table after holding for years. That makes it feel much more structural. So beyond the $1.7 billion in profit, what other numbers show the sheer scale of this turnover?
Well, we should look at what's called revived supply. That's the total value of these older dormant coins re-entering the market. That figure actually hit its second highest level this cycle, around $2.9 billion per day.
$2.9 billion. Okay, so $1.7 billion, that is profit. The rest is just old supply moving. That's a huge amount for the market to absorb.
A huge weight, exactly. And, while we're focused on the profits, we should also mention the other side. Realized losses also climbed. They hit about $430 million daily, which is actually the third highest level this cycle.
So that raises a point, doesn't it? If the OGs are taking billions in profit and losses are also hitting highs, does that imply maybe newer entrants, perhaps retail who bought higher, are the ones realizing those losses?
It certainly fits that narrative. It looks like a classic market cycle phase. The oldest hands lock in huge gains, while maybe some newer, less patient capital exits at a loss. This potentially clears the way, frees up supply for the next wave of buyers.
Right, which connects to this bigger idea of ownership changing hands.
Precisely. It's not just trading back and forth. It feels like a really significant structural transfer of supply. And maybe here's our analogy for today to help picture it. Imagine a huge, really established family business. Let's say the OGs are like the founding family members who've held shares forever.
Okay.
And now they're deciding to sell off a really large chunk of their stake. And who's buying? It's these big, sophisticated new institutional investors, the TradFi players, who are finally getting proper regulated access, maybe through things like the spot ETFs.
Okay, that clicks. The old guard passing the torch, or the ledger, I guess, to the new institutional class. But, playing devil's advocate, are these TradFi buyers really in it for the long haul? Or are they just another type of trader? Does this shift make the market more stable or just different?
That's the million-dollar question, isn't it? That's what we'll be watching unfold over the next, say, year or two. For now, the fact that TradFi is absorbing billions and selling daily, often at prices where retail gets nervous, suggests some conviction. They're not just testing the waters.
And we're not just talking theory here. You mentioned industry leaders are seeing this firsthand.
Yeah, this is where the anecdotes really bring the data to life. Mike Novogratz from Galaxy Digital, he talked about this publicly. He specifically said the main supply his firm sees hitting the market, it's from these old OGs and miners. That's it.
And he had some stories too, right?
He did. He mentioned friends, people he knew who had, quote, rode this so long. And they finally decided, okay, time to cash in for something major. He mentioned someone buying a yacht, someone else buying a stake in a sports team.
Wow. Okay, that really grounds it. We're not just talking numbers on a screen. We're talking life-altering wealth realization.
Hmm.
It underscores why the selling pressure exists and why it's been so persistent. These aren't panic sellers.
Exactly. It's goal-driven selling, the culmination of a very long, very patient investment for many. So let's pivot slightly. Thinking long-term, what are the implications? Crypto investor Will Clemente, he has an interesting take. He basically argues this period of relative weakness, this price resistance we've seen, it's fundamentally just this transfer of supply from OGs to TradFi.
And crucially, he suggests that once this transfer is done, this whole dynamic becomes, quote, mostly irrelevant in the coming years. That's a bold statement. It implies that once this generational handover is complete, the constant downward pressure just evaporates.
Right, the market effectively resets with a new, potentially very strong institutional base of ownership.
You know, that whole dynamic makes me think of our metaphor for today.
Yeah.
It's like this OG selling pressure is a heavyweight sitting on top of a coiled spring.
Mm.
A weight is stopping the spring from, popping right now. It looks like stagnation. But underneath, the energy, that new institutional demand, the TradFi interest it's building up, coiling the spring tighter. And once that weight, the necessary profit-taking, is finally lifted, well, the potential for a really big move upwards seems primed.
That's a great way to put it. It captures that tension perfectly. Massive selling being met by potentially equally massive buying. But while we wait for that transfer to play out, we obviously need to watch the technicals, the support levels, to see if the buyers are actually holding the line.
Right, because the pressure is real now.
Exactly. And analyst Rect Capital pointed out something important here. Despite all this selling, the asset managed to hold a really crucial support level recently. Specifically, getting a weekly candle close above $108,700.
Okay, $108,700. Why that number specifically? Is it psychological, or is there something in the charts?
It's very significant technically. It represents a major historical level where a lot of trading volume occurred previously, what traders call a point of control. Holding above it, despite billions in selling, shows that the underlying demand is proving resilient. It's absorbing the supply without the market structure breaking down.
So stability there is key.
Absolutely key, according to Rect Capital. If Bitcoin can keep holding that line against this fundamental selling pressure, then technically the path could open up for a rally towards, say, $120,000 or even higher in the medium term. It suggests the demand structure is solid.
Okay, so let's synthesize this. If we pull it all together from this deep dive, the resistance we're seeing isn't necessarily manipulation like some might think. It's more likely organic. Necessary even. It's the market basically digesting that turnover of supply.
Yeah, it's the old guard, the long-term holders, passing billions in Bitcoin to these new, large institutional players who are finally stepping up.
Which leads us to that final thought, that question for you, the listener, to ponder.
Right. Given this dramatic shift in who owns Bitcoin, moving from, decentralized, long-term retail types towards more concentrated, institutionally managed capital, how might that fundamentally change things? How might it alter market behavior, volatility, maybe even the whole narrative around Bitcoin in the next cycle?
That is a huge question. Lots to think about there. Definitely implications beyond just the price chart. Something to mull over. Well, that wraps up our deep dive for today. If you found these insights useful, please do take a second to follow, like, or share the session. It really helps.
And for all the analysis and sources we touched on, you can follow What Bitcoin Taught Me on Twitter X, Nostr, Blue Sky, Threads, Instagram, Facebook, and LinkedIn. Thanks for tuning in.